How's it going? Welcome back. It's Jonathan, and holy moly, let's take a quick look at gold because gold has gone berserk. So what we're looking at here is the gold futures chart, okay? Gold futures GC2 spot, and we can see definitely that our reversal last week did in fact take place. However, we did pinpoint two possible square of 9 levels that the market didn't actually reverse at. So the first one was this 360-degree level, which provided some levels of resistance in the past. If we zoom in here, we can see that the market came up. Let me get a pencil. Let me turn off this actually. The market came up, broke through that, and then rejected it. It then pretty much gapped up, and this is the futures, remember, it's not gold price in the sense that you're used to looking it at. It gapped up the next day, kind of found some support on it, or at least closed this gap, and then didn't break it since. It then came up and hit the 45-degree angle, which was at approximately 93. Came up, hit it, got rejected off it before looking like it was going to reverse before not reversing. And then on Friday, we just had an explosive run higher. So where to from here? Well, the next logical price point would be this 1959 level, and this is for the futures, okay? So the actual gold price might be slightly different, but 1959 might be a level to be watching for a potential reversal in this market, and let me just show you why. So I've got this piece of software here. It's called Timing Solutions. It's not the easiest software to utilize, but let me just show you a few things. What we're looking at here is a turning points analyzer, and it's pretty much forecasting tops and bottoms in the market based on prior turning points. So if we go back in time, it basically analyzes all these turning points and then gives us a statistical probability of where the next turning points in the market could be. So at the moment, we got gold sitting at, well, I should say gold futures sitting at 45, and I believe the actual gold price sitting around the 32 mark. The areas that we were watching for this were for a stall in the market to occur, or a potential top to occur around 1919 to 1920. If you were doing any intraday trading yesterday, you would have known that the market did in fact find a bit of resistance right there before declining down to around 1910 before advancing again. And then the next logical area for this is going to be around 1955, and that's a turning point analyzer based on prior turns, okay? So if the market comes up and hits that 1955 range, then we'll probably be looking for a potential turn in the market, okay? And the reason why I wanted to bring that up is because that's pretty much aligning around the 1959 level. So the market did breach through the 1920. 1920 was roughly here, not on the futures, but on the standard price chart. Did fall down to around 1910 or so before advancing higher. So yes, the market did not reverse into our time count and post a bullish stance around the 23rd. Instead, it has continued to rally higher, which means that we should be looking for the next price point for the market to potentially reverse. And we want to ideally base our turning points and price points into what we would deem as a possibly like a major reversal. And what I'm trying to say is you don't want to be just selling every 45-degree angle, every 180-degree angle if they're showing up. You want to be combining the timing element. Now we got this time element here, which is basically the 22nd of October, 23rd of October, from a past low, and we basically just rolled that out 360 degrees or so into the future, which gave us this Friday and Monday turnover, where we'd be expecting possible market to reverse around here. So if the market next week does stabilize a little bit, it doesn't have to stabilize, but if it did stabilize a little bit, there's a potential that the market could fall on Monday. There is a turning point for Monday, which I haven't highlighted here, which I'll definitely go into in the GAN Mastery course. However, if it doesn't turn on Monday and it keeps pushing forward, well, we don't have much of a a range here to be playing with. We've only got about 20 pips or so to be playing with. So $20 move in gold before it hits the next angle. It's either going to smash through this angle and then target the next one, or it's going to find resistance on this angle right here. And ideally, the market does move down, if you're bullish, into this time count before advancing higher. If you're bearish, then you'll be looking for the market to advance higher into the time count and then decline. So let's just take a look at this level here. Now, if we do break 1955, then we'll be looking for our next clustering area, which is the darker area here, which will be around 1964. If we go back to our chart here, we don't really have much around that 1964 range, especially in terms of the 45 degree or the square of 9 angles. And if it breaks through that, the next one that it's highlighting is around $2,011. So if it does break through all this, then we'd be targeting basically around the 270 degree level. Let's see if there's any around the 2011 on the square of 9. No. So that's basically what we're looking at. So at the moment, if you're long, your thought process would be just remaining long until we get a time and price hit. And if you're short, you wouldn't be basically trying to short this market anywhere here unless we get up to this square of 9 level, which is the 180 degree level, and we see some sort of reversal occurring around there. But again, your stops should be roughly above that square of 9 level, which means that if you're buying physical gold, which is the only way to be trading these levels, watching any of my videos, you'd basically be going back to the broker or back to the dealer and selling your gold back to them at the physical exchange. Okay, so let's take a look at the actual market of crypto, because there has been some interesting things play out which could be potentially saving the crypto market. So we'll just wait for that one to load up. I'm just going to close down this one now. So last time that I spoke to you, we had this warning symbol here, and the reason why we were watching that is because there was a potential for reversal that could take out the low right here. Thankfully, especially those bulls, thankfully the market did not take out that low here, and it has instead staged a rally higher. That doesn't mean that you're out of the woodwork yet. So if we go back to our, if I can try to find a weekly chart here. Monthly and weekly. The only way that this downtrend will be cancelled out, and let's go ahead and just measure this now. I'm going to measure it from the bar before to the bar after, or weeks. The reason why I'm counting the bar before is because we basically want bar 1 to be 0. Okay, so we got 9 weeks out, so we got 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. The hypothesis was that if we get 12 or more bars declining below this, then the bias for the market is now down. So that would be a confirmed downtrend. So in this instance, we have 9 bars down. If we got 10, 11, 12 down on the 12th bar, we'll be in a downtrend. So the only way to cancel that out is if the market actually rallies higher than this low. If the market doesn't rally higher than that low, then it is still in a potential area to be confirmed a downtrend. So what has happened here is that the bears still have a chance to take this out, and if it gets taken out on the 12th or more bar, which means that basically any bar now that drops below it is going to confirm that downtrend, because we have 9 weeks of downward moving market. We then have a total of 13 weeks of range. So any market, or any bar I should say, in this market that pushes below this low will confirm a downtrend. So the low will be confirmed once it closes below, and the downtrend will be confirmed. So we're not off the cart yet, because the market needs to advance higher than 32,000 for it to be considered still a valid uptrend. So just keep that in mind. Let's head forward. So the Bitcoin squares, you know, the squares on Bitcoin are just beautiful. You can get rid of these now because the dynamic has changed. But what you'll see, got rid of the wrong one. What you'll see with the Bitcoin squares is that it generally is a perfect hit. Unlike gold, Bitcoin respects the squares a lot more than gold, and it is often times providing very good levels of support and resistance on these levels. So we had a move from the blue top down to the blue bottom, and we're now sitting on this one. If it does decide to go from blue to blue, then that would definitely push us below. So for anyone who's a bull, you're hoping that Bitcoin is going to remain above this square here, and then hopefully target a higher square and a higher square. So any move below, and this is just a daily chart by the way, not the weekly chart, so if those who were looking for the move above the old top, it definitely needs to move above here. So be looking for a green sequence to green sequence to break of the green. Any continued resistance on the blue square could be signaling a potential downtrend. So you'd be hoping now that the market is going to hold here. Now I'm only indicating this based on price right now, not based on time. So anyone who knows the cycle for this year, I don't see that the cycle is going to break this high this year. So we still need to be cautious of a potential downturn. However, the actual forecast for Bitcoin is basically just trading basically in a range for the remainder of the year. So we got, in this instance, 2 more months where I just see Bitcoin just going sideways. Not technically going sideways, but I don't think it's going to push lower, and I don't think it's going to push higher. So it's definitely going to be a range, and we might get a break below this low here, which could be reversed into next year. Now, it's interesting to note because if we quickly look over at our seasonality, yes, September is generally a bear market for crypto. However, if we move into October and November, we generally see, seasonality-wise, that November is generally quite strong. So we got a potential here that the market is going to push higher, but I just don't think that it's going to break above that high here, okay? So let me go back to this one here. So some potential good news for the crypto holders if you're still here. What we're looking at here is our midpoint for this 90-day cycle. So the last cycle had ended with a low down here, confirmed hit. If you were to take this cycle out into the future, you'd be looking for a potential of a low to occur around the end of November. The good news is, and the reason why I wanted to bring this up today, is that we potentially have a right translation top. So if I just move this one here, for example, and when we have a right translation top, that generally means that the market finishes higher than it began. So that means that we should get a top, or we should get a high, which is higher than the low that occurred here. So if I go ahead and just delete this one now, if the market is going to remain in this bullish stance, it should stay above $25,350, okay? If it breaks that, then there's possibility that the market is going lower. What you'd be watching now for your second cycle, let me go ahead and pop on a poly. Right here, we are now watching for a left or right translation top here to then give us that either higher low or lower high over here. So at the moment we are looking at a left translation top. The reason for that is because the current top has occurred on the left hand side of this midpoint here, and then that would signal a lower low. But if the market can push higher and just give us a right translation top, which means that the market just needs to hit 28,000, then that would give us two confirmations that at the end of the cycle the market is going to end higher than where it began. That is pretty much how you would utilize this, okay? Let's go ahead and now save this one as our new chart. So just to recap for Bitcoin, the bulls are still safe from the bears. I think that's probably the best way to recap it. The Dow Jones. So the market found a low on the 6th of October, And now I want to show you something, because I did highlight this inside the ASX Trader group on Facebook. So if you're not a part of that, you probably might be interested in getting a part of that, because a lot of good analysis and research is provided there. We had our top, which we were looking at in August. The market moved down. We then had our time counts, which I don't have on this computer anymore, so that's why I haven't been able to track them for you. And we had a time counts hitting. We did get a top on a time count. The market didn't respect our lows here, instead gave us another top on the next time count. So we then had a series of tops occur. The market pushed lower. Now, if we go back in time, we can see, especially if we use an anniversary date, I'm going to use my time measure tool. We can see if we pull this fifth top out and we go forward basically 360 degrees, we got another hit. In this instance, it went from basically top to bottom. Now you can do this obviously for any high and low. However, Gann always taught that you should be looking for the major highs and lows of the year. Okay, you should be looking for. Let's move that to 360. So we basically had a top and then a bottom. Gann always taught that you should be looking for the major highs and lows of the year, and then basically going forward and finding that polarity. However, I've found that there is great success in going for these minor swings and also pinpointing minor swings into the future. I don't know if anyone else is doing that, especially on YouTube publicly. I was hesitant to show you it for a long time. However, now that I've shown you once, I might as well just keep it up and just keep showing you these. So if you were to be looking for another top in the market, you'd be looking for basically a 360 degree rotation off the 30th of October, which potentially, not guaranteed, but which potentially gave us a top yesterday. And then it'd go out, but there's no actual valid swing here until we get to possibly around here. So that's actually quite concerning, but that's just a high-low pattern. I think that potentially that the market has bottomed, and it bottomed on the 6th of October. And I think that probably the possible directional bias is now up, which gave us basically a repeat from August 15 down to October, and basically a repeat if you were to use basically the same time cycle, basically down prices and then up prices, down prices, then possibly up prices. That's sort of what I'd be looking at, where we had our X date in this period here and it was not actually triggered. It was not triggered on both years, and the market continued to advance lower. So yes, the trajectory lower was much deeper than this year, which if you're a bull, that's good. If you're a bear, obviously not so good. But I think all our price and time targets have now been hit, and I think it would be fair to say that the market is more likely to be pushing higher than lower. So if you enjoy any of these videos, please leave a thumbs up. Obviously, I don't have a lot of interaction with you guys in the comment section, so if there's anything you do want to be seeing, please let me know. I'm actually just going to put that last one back on because we're going to track that one out now. And okay, yes, and if you're interested in joining the Game Mastery program, I'm going to pop a link below for you to join. So there are a few more spots left. Yes, we are taking in increments people, and each time that each increment is filled up, the price will increase to its nominal fee of $2,999, where you can learn these sort of Gann techniques, and you can sort of, it's not so much a done for you program where I was doing the forecast service and I would basically build out the roadmap. I'm going to be showing you these techniques, and I'm going to be showing you how to interpret them. So it's one thing to just be seeing it, it's another thing to actually know how to interpret it and utilize it on your chart. Once you've got it on your chart, you can then back test that method, and then you can go ahead and apply it into the future. Now, a lot of the techniques that Gann taught, he didn't actually teach you the whole method. He only gave you part of the method, and your job was to work out the other part. So I'm going to be doing the exact same thing in the back end, where I'm going to teach you basically what he teaches you in one form, And then as the system builds over time, everything's going to fall together, because we're going to be going through the nitty-gritty stuff, which he didn't teach until he basically gave out his master forecasting programs. And that's when the pieces of the puzzle are going to start to line together, and you can get a better understanding on how to interpret market price action. So again, the link's in the description below if you're interested in that. And that's all I have. So gold possibly up for a little bit longer, Bitcoin sideways, and the Dow Jones, I'd be possibly looking for prices to rally on there. But let's see how we go. I'll talk to you possibly next week.